Hey everybody, have you guys heard of Assumable loan? Well, it's a great program because you can keep that person's interest rate. So if it's at 2%, 3%, 4%, you can assume that part of the loan and keep that interest rate, which is nice. We're also going to talk about the balance of the loan with Shelly, and she's going to go over that as well.
There's a lot of craze right now about these assumable loans, and the number one benefit is that you're able to assume the seller's interest rate. So if they had an interest rate of, like Bobby mentioned, 2, 3, 4%, you can actually take over that loan by assuming that loan.
That's great. And is it conventional, FHA, VA?
So the two types of loan programs that are assumable are FHA and VA only. Conventional loans, unfortunately, are not.
Perfect. Now, with that type of loan, is it a straightforward loan? Is it a different type of loan that you qualify for?
So you're going to qualify for the assumable loan exactly the same way you would qualify for a traditional financing. The one thing to be mindful of is, let's just say we're going to purchase a home that's $300,000, and on that the seller has a mortgage of $200,000 that you want to assume. You still have to cover that gap between that $200,000 loan amount and what the seller wants to sell that home for, which is $300,000. So what happens is you go and you qualify for the assumable loan with the seller servicer, and then you come to us to provide either an equity line of credit to cover that additional $100,000, or you can pay cash for that $100,000, making that $300,000 total and making your seller whole.
So you can keep that assumable loan. It can be assumed to you, but it has to be FHA or VA, so it can't be conventional. So keep that in mind. So you have to qualify for one of those two. Now you'll have two loans. So you'll have the assumable loan at your 2, 3, 4% that they had, and then you'll have your home equity line of credit if you don't do the difference in cash.
That's right. So assumable loans, just keep in mind that you also have to qualify with the current servicer, and then if you don't have cash to pay the difference, you'd have to come to us at Prosperity Lending to qualify for that second mortgage.
That's great. So you guys can still utilize that 2, 3% interest rate that somebody else had. So call us regarding this so we can explain it to you, see if you do qualify, because it's amazing that you'll have that interest rate, that lower interest rate on part of your house. So give us a call. You can reach out to us. You can call us, text us, email us, however you want to get a hold of us. We're here to help you in any way possible. And with that said, you guys have a blessed day.